President Biden and former President Donald Trump in the political spotlight this week, both preparing to take the stage in the first 2024 presidential debate on Thursday. And while Biden and Trump go head-to-head on their economic agendas, they share one area of common ground. That is stricter trade barriers with China. Here with more on U.S.-China relations, we have Shehzad Qazi, China Beige Book International Managing Director. Good to see you.
Good to see you too.
So they both agree in vague terms, right, about some level of protectionism with China. The magnitude, however, is quite different, right? Because we have heard President Biden has put on some new tariffs on China. Former President Trump has talked about really expansive tariffs. So what are you going to be listening for?
Yeah, I think we know that the Trump team, and specifically President Trump, he's talking about 60% tariffs on China and double-digit tariffs across the board, generally getting the country out of, ending the PNTR status with China, the permanent normal trading relations, and maybe even pulling the U.S. out of the WTO altogether. Now, the reality is in a debate format, when you have two opposing sides standing, they're just going to try to outdo each other. You'll put 25% tariffs? How about 250% tariffs, right? So the idea is, can they actually get any of this agenda of theirs accomplished when they are in office? How realistic are the trade policy promises that they're going to be making the American workers predominantly, and how are they going to protect American farmers and so forth as they lay out their agenda on Thursday?
And Shehzad, sort of like regardless of who wins in November, what do you think that relationship between the U.S. and China looks like, in kind of the near intermediate term here?
Yeah, tensions have been rising. There's no question about that. And I think specifically as we get into 2025, regardless of who's president, we are going to see that trade war part 2 play out.
What is that, a trade war part 2? What does that actually look like?
Well, I think what that looks like predominantly is figuring out additional industries on which there are going to be more tariffs. Getting really strict, I think, or stricter about export controls, maybe finally becoming a little bit more serious about curtailing outbound investment in strategic sectors in China. So the various aspects of U.S.-China trade and a relationship that we've seen, I think getting stricter on all of those will be absolutely in play.
Have the tariffs that have been put in place accomplished what they set out to accomplish?
Yes and no. We don't have any Chinese electric vehicles on our streets today, and Republicans in Congress and elsewhere will tell you that's because of what President Trump did when he was in office. We're not sure that's about it, but there is an example there. That said, look, we know that the trade deficit, of course, for us only grew in the aftermath of the tariffs. And now we know that trade is being simply rerouted through Southeast Asian and Central American countries. So we really haven't, if the idea was to bring down that bilateral trade deficit in a straightforward format, perhaps some years you can show the math.
Well, it's been diversified at the very least, right?
That's exactly it. That's absolutely it.
Shehzad, it's impressive, too, how this seems to be the one issue, China, really, that Democrats, Republicans actually seem to agree on in Washington. This is the one issue where so much of the rhetoric seems to be China is not just a competitor anymore, but this rhetoric, China is actually an adversary. Are you surprised by that? This is sort of the one almost issue people in Capitol Hill can agree on?
This predates President Trump coming into office, but it was gathering steam, and of course, he just accelerated this. And yesterday in Washington, D.C., I can't go from one office to another, Republican or Democrat, without talking about this exact issue, China as an adversary. What's happening and what is making it difficult for markets to track this is there's a lot of rhetoric, there's a lot of talk, but the action isn't always there. And it's become impossible almost on certain days and weeks to figure out how tough is this action actually going to be? What are the loopholes in all the executive orders that we've seen coming down? So it gets really murky when you start, when money depends on, tracking these policies.
Something else I'm also curious about is that while there is this bipartisan tone, certainly, with regard to China, we also know that former President Trump is, shall we say, or has been friendlier with Vladimir Putin, who is now in turn getting friendlier with China. So how could that potentially affect the relationship?
Yeah, I think a lot of it will come down on personnel, and there's a lot of infighting that has, I think, begun in terms of who really is telling or would tell the president what to do. Some of it is, quite frankly, TBD. But at the end of the day, I don't think a lot of people have made money trying to predict exactly what President Trump would do. Comes down to the man himself, I think.
Yeah. Do you think, for American executives and CEOs who are listening to this right now, how should they think about China as an opportunity? Is it still as big as maybe they once imagined 10 years ago? Or no, looking forward, it's still an opportunity, but it's going to be different. It's going to be smaller.
Yeah. So first of all, world's second largest economy, not going anywhere. It's about becoming smarter on China finally. You can't take it for granted that the regulatory environment, the hard time is over. Now we can go back and play again. It'll be fine. No, you have to track the regulatory environment in China very, very carefully. You can't assume that when the economy's in a little bit of trouble, the government will step in and shove a bunch of money into the system to propel growth. It doesn't work that way anymore. The economic model has changed. So it's about tracking the economy as closely and as intelligently as you possibly can. And quite frankly, the street isn't used to doing that.
And so I guess kind of where is China right now then, right? We had all these sort of fits and starts at maybe more of a recovery that hasn't materialized, but maybe is starting to materialize? Yeah,
I would say the first quarter, the economy kicked off on a fantastic start compared to where we had been. And as we look through now coming into the summer, I think there's probably a lot more resiliency in the economy than is being broadly recognized. Under the hood, I think some of the data, especially in terms of retail spending and all that, will likely remain choppy. We're looking at the property market with a lot of focus, and our view is that probably second half of this year we get a cyclical bottom in the Chinese property market, specifically I should say the housing market. If that happens, the overall economic story in China may be a lot more positive than I think currently investors anticipate.
And just quickly, Shehzad, your base case though for growth this year, what does it look like versus last year?
Look, last year they claimed they hit 5.2 and they claim they're going to expand over that this year. I don't think they beat last year's growth level, but they get close to that. So I think the picture overall is not nearly as depressing as some would have you believe.
Not nearly as depressing. We'll take it. Shehzad, thank you so much. Appreciate it.